Good morning and welcome to the daily market update with FP Markets. So another poor day on Wall Street, and not entirely unexpected after the continuing news of COVID Omicron's spread across the world, numbers increasing up again here in Australia today as well. Although, as you can see here, bucking the trend this morning, the ASX 200 is actually sitting comfortably up 0.25%. So a little bit of a jump back from yesterday's decline and not getting hit as hard as some of the other bourses. I'll just bring that chart up, as you can see there, but still, really close to historic highs, I suppose, as are most of the bourses, despite recent corrections. That's the S&P there, as you can see, a little bit off the tops, but it's going to be a very interesting few days, I think, ahead of us as we move into the Christmas period. Liquidity is starting to thin out a bit, and will continue to do so up to the end of the week, and indeed probably through next week as we move into that period with a full week sort of in between Christmas and New Year. So some strong reactions. Obviously, there's not too much in the way of tier one data, as I indicated yesterday, that's going to give us too much of trading opportunities, but really it's going to be on sentiment and how things are moving. I think the general consensus at the moment in the street is we don't know how much of an effect this latest pandemic spread is going to affect economies, and so there's a bit of profit taking going through the market. Not huge hits, but 1.1% down, both for the S&P and the Nasdaq is considerable. We'll be keeping an eye on that as well. We've just had the minutes out here in Australia from the RBA's last meeting, and a little bit of caution coming through from the Reserve Bank, and that's not entirely unexpected given what we've seen over the last few weeks and months, I suppose. And that's actually probably helped a little bit with that ASX move back to the top side. Aussie dollar not really reacting at all. Looks like we've got some options interest around 71 the figure. I would suggest we need something to really, some fresh news to really take us out of this sort of current trading range, which is in a little bit of a malaise at the moment. Skipping across the rest of the currencies, we are seeing the dollar is on the ascendancy, and I think that's with the safe haven buying that we are seeing for the greenback against most of the currencies. As you can see here, Kiwi still sitting on yearly lows. It's really struggling to get too much of a bounce. We did have one the other day, capped out just below 68.50. We're back down to 67 the figure, right on that low for the year as well. So keep an eye on that. We could see some more moves from the Kiwi, and we might get a little bit of a break. But once again, I think we're looking for that next catalyst, that next thing that moves us. Looking across to sterling, a lot of interest in cable from most of our client base. As we know, it's probably been the best or the whippiest trading currency of 2021, and that therefore has probably the most interest at the moment, even more than the single country currency, which is our traditional biggest product. Still sitting on this longer term trend line here, and you can see this in a little bit more depth from the hourly. I suppose bears will be targeting, I think I talked about this yesterday, and we did get down to this low, we didn't break through it. Bears will be targeting probably a break of that, and maybe on the safe side a break of 130, 150. We're still 50 pips away from that as well. Looks and feels like we're probably going to have to wait for the UK and London session to open up before we get a real drive in cable. Euro again looking a little bit vulnerable down at these levels, failing to sort of like bounce too far, but certainly a little bit of interest around these levels. We've had a few bounces, especially on this daily chart. Bears once again probably looking for a decent break of that. Bulls will just be collecting some slowly around these levels. Dollar yen fairly moribund again. Still sitting in the middle of this range. It's been a bit of a pattern for dollar yen this year, hasn't it? And we're used to it flying around, and I think we really do need that sort of interest rate differential and a real move in sentiment to really get it going. Obviously, we're not going to get too much from the BOJ. Very, very quiet on the data front today. To really influence most of the currencies. So I think we're still looking for fresh news, and hopefully it's some good news that comes out. But really, it feels like governments across the world, and looking at a lot of headlines today, are sort of starting to get a little bit more on the back foot. And you can see here, headline coming up: Omicron keeps markets on edge. Governments, I don't think they want to go into lockdowns. The Netherlands has gone into a lockdown, as I mentioned yesterday, but they do know it is something they can do if it starts to get out of control. I don't think any of the population wants it either, but it's certainly something that could be on the cards. If we start to see those lockdown headlines come out and some of the more prevalent jurisdictions and countries in the world start hitting with lockdowns or I suppose greater restrictions, expect to see sentiment wane and maybe get hit even harder. And that's when we'll see stocks come off, and that's probably when we'll see the dollar continue to move to the top side. There's Swissy, been nice and whippy really, hasn't it? Having a look down at Euro Swiss, still back on its lows as well. Keep an eye on that. But been fairly whippy through the month of December. Whippy within the range though, so 91.60, 92.80 really has done it for us. But a few times it's traded in there, so plenty of range-bound trading opportunities for the Swiss. Looking across to my mix and match page, oil did get a little bit of a bounce, but we didn't see too much of an ascendancy with CAD on that one. But we've bounced off this sort of like pretty weak trend line, to be honest. But bounced down there from sort of 65. We're back just under $70 a barrel for WTI. So that's something to keep an eye on as well, and especially if you're trading the CAD, if you're trading the Norwegian, if you're trading any of the Middle Eastern currencies, oil fluctuations will really help you. Longer term, this is my gold chart. We haven't broken, have we? The one I was thinking of. Still wondering if we're going to get to the new year before we get a break of this sort of like longer term channel. It is squeezing in. It is on the daily charts. It is a little bit longer. Bounced really nicely again off of this line down here, and we're sitting here just under $1,800 an ounce. So interesting moves. I think there's propensity for some more moves. I think we could see some more catalysts. At the moment, obviously, we do seem to be selling any rallies. That makes sense with what we've got coming out. But traders and investors are going to be keeping their eye on the news wires very, very closely for those next moves. So good luck with your trading today, guys. If you need anything from us at FP Markets, please do give us a shout. And good luck. Thanks very much. Cheers.